So I think this is our second interview, Carlos. I'm just taking over right away.
Oh yeah, it's all right. The
That's
classic
what I'm
host. You
saying. You
do it.
gotta be.
This is our
You got
second. This is only our second. Warren Redlick was our
steamroll.
first, right? Wasn't
Oh
Right.
it?
So this is
wow.
a tough act to follow, brother, because we interviewed Warren Redlick. If you know Warren Redlick,
No, I don't.
listen, you should know Warren Redlick. Claim to
Yeah, yeah.
fame,
After.
Tesla.
Yeah.
He was a former lawyer, or maybe he still is a lawyer. Does a lot of takedown videos. Has really strong opinions. And we had issue with something he said. He invited us on his show to debate it, which was great. That was really cool of him. So this is a tough act to follow.
Yeah. What was it about? Was it about Tesla that you were debating, or?
Mostly about Tesla and FUV.
No, we were debating about the way he conducted himself with Ben Sullins. That was
That was only the beginning part, though. That was
okay,
like
yeah.
10 minutes of it.
he said some things in a takedown video of this other guy who we agreed with him, but he kind of went too far.
Oh, really? Yeah,
We'll
I've
post
noticed.
the link
Well,
in the corner.
yeah, exactly.
I'm
Go up
sorry,
there.
I'm used to. I'm
Well, we've
sorry.
seen that, haven't we, recently with I think it's chicken soup from Singapore. Like these people are just taking it too
Did you
far.
just call him chicken soup?
Is that him? No.
Love it.
Oh
that's
god,
great.
I
You
didn't even.
gotta-
Well, I didn't. To be fair, I'm probably one of the few people who didn't know him, and then everyone's been mentioning him. I've been watching his videos and be like, oh shit, like he's actually got some good stuff.
It's amazing, amazing.
Yeah.
200,000 plus followers, and he gives like mostly sound advice, and we debated it on our video if it was sound advice.
Yes.
But I think it's 90% sound advice with a little bit of like know your audience. You know what I mean?
Yeah,
Yeah,
'cause he was
even
very.
some of his strategies to get people to click. We know because we're YouTubers, like you have to do this stuff. But some of it can be misleading to like a new investor. It's a little dangerous for people to follow an advanced options trader like him.
Yeah, definitely. And he was very concentrated in Tesla, wasn't he? I think like 90% or something. And
Oh,
that's
yeah.
where he made most
I
of
mean,
his money.
everyone at this point, if you've been buying dips and you've been consolidating your portfolio, how do you not be a majority in Tesla at this point? It's just been an explosion.
Yeah, the past few years.
Yeah, for example, I mean, to go into specifically into Tesla, when I first bought Tesla, it was not 90% of my portfolio.
No.
It is now 90%. Well, actually, to be honest, it's like 36% of my portfolio. But still, it went from a couple of percent to 36% over 2-3 years. And I'm sure the same for Carlos.
It just
Something
gains.
similar happened.
It gains. Yeah, it just gains. It just
Yeah.
swells up.
Yeah.
That's interesting. You guys don't sort of sell some off to try and balance the portfolio again. You just hold on to
Sell
it.
Tesla? Wait, did you just say sell Tesla?
Well, to be
anything.
honest, I sold a couple of shares back in maybe April 2020, and I bought them back all back at a higher price.
For premium.
Luckily, yeah, for premium, but I've never sold all my shares. So I always had 90% of my shares. I never got rid of those, but
Yeah.
I thought I could time something, and you can't time something like Tesla. It's impossible because as soon as you think you got some top, like $900, it hit $900 in the pandemic before the split,
Yeah,
and
before
then
the
tanked to $300, and then we're like, okay, maybe it's going lower, and then at 350, no, 400, no, 450, okay, I got to buy back in.
gotta buy back in.
Yeah.
That was me. The only time I did sell Tesla was at the peak of the pandemic when everything was crashing. Only because I'm like, okay, this is obviously going down. But it was like 988, sold some maybe at 800, and then ended up buying it back at 700. I can't let it go.
You haven't followed ARK because I think ARK recently sold quite a lot, didn't they? Of their, I don't know if you saw that or
They
150
did,
million.
but this is the problem with everyone. Every time ARK sells any Tesla,
Yeah,
we
they
can
get
go to the
all
numbers. We can show you. Yeah, so I just want to quickly show this, that people are talking on the internet now. I think even Amit mentioned something, and I follow him.
Yeah.
Great guy. And obviously, thanks, Amit, for getting us on this podcast. So appreciate that. But
Yeah, he was the connection.
yeah, he was referring in a tweet about that Kathy's selling off Tesla, and he feels for us as a Palantir holder because she sold all of Palantir, and I'm like, it's not the same thing. She holds so much Tesla, like right now. I think it actually went down, by the way. It was 10%. Now it's at 7%. When people say she sold a bit, it's because she didn't sell out. She sold because she needed to rebalance her portfolio because Tesla's moving up. And maybe she thinks short term there are better opportunities, which are fine, but she's not selling out of Tesla. So yes, she holds 1.59 billion in terms of market value for the company. And when we see this go to zero, that was my point. When we see go a 7.12% go to zero, that's when I would get worried. Like, oh my God, Kathy's losing faith in Tesla. At this point, it's still her number one position. And you can say that, yeah, she's selling out, but I think she just sees other opportunities, some of these other stocks that are being beaten down.
But it's also she is running a fund, and it's her responsibility to protect the fund. Like, you don't know what she's got on her personal account, right? But she can't risk having one company be more than 10% of the fund. It just moves the fund too much, and it's going to affect the price, which could then cascade, right? So she's being responsible, but people will jump on anything to say, "Oh my God, Tesla's gonna tank." No, it's fine.
Classic fintech.
Well, short term it might. We don't know. We don't know. And if she believes short term it might, she might feel as an arbitrage opportunity too. That's possible.
That's fine. That's fine. But
But
we
it's
don't
bad
think
advice for us to follow her into the breach every time she sells because I don't have 1.59 billion of Tesla sitting around. I wouldn't be on YouTube, honestly.
Yeah, exactly.
he'd be
And aren't
chilling
they-
with chicken in Singapore or
I'd be
somewhere.
yeah, basically
On one of his islands.
Thailand
Well,
somewhere.
but that segues it back to how we started. Is that yes, you don't follow Kathy Woods into every single trade, just like you don't follow Chicken. Chicken
And
Genius.
I still have Palantir, by the way. I don't know if you saw any of our videos, but I actually do own a position in Palantir, and I have 1,000 shares. I spent 25 grand at the time. Now it's down to I don't know. I don't look at it. It's like
Yeah,
13 grand, I think. I try to ignore it and put it out of mind for until it comes back. I actually think it will come back too.
Yeah, I agree. I think it's a really interesting company. But I guess we'll go back to, where did you guys start investing? Because it's, very tech orientated, very growth orientated from what I've seen. But, how did you get into it? I don't know who wants to start.
Well, I'll start. I was
Rock,
actually
paper, scissors.
yeah. I was a cinematographer and an engineer and a couple of other professions during my investing journey. And I started buying two-family houses at 23, 24 years old into real estate.
Yeah.
And I did it even with a guy who was younger than me. I think he was like 20 years old. So we started buying really beaten down, messed up houses that my mother told me would fail immediately as soon as she saw it. And that's how it started. I started buying these houses. And eventually, me and Carlos have a history where we know each other. But the way we got into investing is me and Carlos started talking about real estate and investing. And I'm like, hey, I have a deal on a two-family house. Are you interested in coming in? And he said, yes, I would like to make money with you. And he went in, and now we're actually partners in real estate as well. That led to talking about stocks like Tesla. And then that led in the pandemic to talking about basically every day just discussing investing and stocks. And we're like, we should just try a channel. We're both filmmakers.
This is not like every day. Like my wife was worried about how much we were talking on the phone.
Every
We
day.
would
It's
just
every
talk on
day.
the
Yeah.
phone.
4 hours a day. So-
Hey,
Or she'd hear
every
the
day.
phone go and be like, oh, not again.
Well, we'd be texting, then we'd talk. I mean, and then I actually went to Colombia.
he would say goodnight.
Yeah,
He would call me and
exactly.
say,
Love you. Goodbye.
Right, say you hang up first. No, you hang up first. It was pretty crazy. And then at some point in the pandemic, we were like, these conversations, we're cracking up, we're having a good time. Maybe we just record them, even as a record of our conversations, and put them on YouTube. And if anyone gains any value, it could be fun. And here we are, 2 years later. It's actually almost 3 years now, right? Could be 2020, 2021 now coming up. And I think May this year, May 2022.
That's
Will
great.
be
it's over 2 years now. But the thing is, me personally, I'm not speaking for Carlos, but I've always wanted to be a YouTuber. But I've always been an actual. My background, I said, is also film, so I have made actual films and commercials and TV. And he works in the television industry. But I've always looked at YouTubers like, I think I can do that. And so
Yeah.
maybe the pandemic was the perfect opportunity to say, you know what? This is the time to try it if we're ever going to try it, because otherwise then you get too busy, right? And the pandemic sort of gave a weird time where you can
Oh my God, all we had was just free time.
just free time,
I
right?
could imagine in film as well, film and all that stuff.
It dried
Everything
out for a
shut
long
down,
time.
It was everything stopped. Everything stopped. I mean, I ended up finding a job shortly after, but at that point we'd already popped our YouTube cherry. It was too late. Can't put the cherry back.
It's the classic thing though. You see this person like they're doing a video and they have like 100,000 subscribers. You're like, that's shit. Like I could do better than that. I don't know if you've ever thought of that. Like not everyone, but just one person.
Yeah, no. We think we can
Gotcha.
get there eventually, and
Yeah.
I think it's a grind. A lot of people do get lucky and hit the right off to the races. But
Even
even if
Mark
you look
Ryan, one video, million views,
Yeah.
monetized, 200,000 subs.
But if you look at Chicken Genius, that's another example. He actually was doing it, I think, 2018. He was doing some silly stuff, review stuff. Tom Nash said he was doing other things like reviewing things. So they took multiple years to like crack a certain percentage of folks to break through. So I think eventually it will happen because we are grinding. We are making good videos, I think. We have a cool Discord with people who are interested. I don't know if you joined our Discord, you should. And everybody watching this, join the Discord.
Yeah.
But there is a lot of value to actual discussions on our Discord because they're talking about stocks I care about, like Tesla and FUV and Enphase. And so people are posting links and information that I don't have direct access to right away, or I have to search very like a lot for.
Yeah.
So it's actually given us, I think it's made us better investors to read other people's points of view as well. You know.
Well, another thing I appreciate about it is you can go into more detail in the Discord than you can even in the YouTube comment section. So you can get into much deeper conversations, have threads, and DMs. You can talk to people on the side. It's a good place to sort of consolidate all of it, because otherwise it's spread across all the videos on your channel. It's nice to have it all in one place.
Yeah.
Yeah, well, I'm sure those calls that you had like between yourselves really helps your own investing, because if you have someone else that you're bouncing ideas off, you're learning from. So it's almost the same in Discord, just with a lot more people.
Yeah, the calls do help because like they're long calls, by the way. Yeah, and we're gonna if we recorded the actual nonsense, the 4 hour, sometimes 4 hour calls. Like my wife is like, "What are you doing? Are you cheating on me?"
What do you mean? Oh, the when we recorded an episode?
No, when we actually on the phone.
Oh, on the phone.
4
Yeah,
hours.
that's a whole other
The episode
thing.
is short compared to the actual call.
Well, actually, I do want to go back if you care. I'll give you my history, where I came from and how I started investing. I started investing, like Vitaly said, all the real estate stuff, but that actually came a little bit later for me. I started investing in about 99, 2000. I remember I had started a small business with some friends, and I was suggesting to them, hey, we're making a bunch of money and we're buying all this Apple gear. Why don't we invest in Apple? I couldn't convince my partners at the time to do it. And so literally, I would say December 1999, our company when we had issues in the company, and right after 9/11, the company tanked. I mean, everything. I don't know if you remember. Everything just got tanked, and so I had like $900 in the bank, and I told myself, if I don't invest now, or if I can do this now, then I can invest. I'll be an investor for life. And I had two people in my life. One of them was my best friend at the time, and my aunt, who made a bunch of money investing in like Home Depot, a lot of those Dow Jones stocks in the 70s and 80s, and she bought her house for fractions, for a fraction of the dollar.
Wow.
And so I started investing in like 99, 2000. And I started really going hard in 2001. I bought my first share of Apple at $14. With $90, I bought $14 or whatever worth of Apple. I bought some Sirius satellite radio and some XM. And from then I was like literally watching it every day. Like, investors, you do that. You watch the price every day. And that's what sort of started it off. And I would say I went really heavy for a few years, probably till 2004, 2005. I mean, I went heavy into stocks. And then I forgot about my portfolio. I sort of went dark. I got really busy with my career and I forgot my portfolio up until about, I would say 2009 or 10. And when I opened it up again, I mean, I had hundreds of thousands of dollars. I probably put 40,000 in. And that's when it really hit me like, oh my God, buy and hold. And, the Apple position was insane. And so that started getting me back into it. And then when I met Vitaly and we started doing more of the real estate investing and we started recognizing the opportunity in Tesla, it became obvious that this was going to be another one of those buy and hold and you're going to be really rich. And then I'd say more recently in 2020, we started talking about crypto. Like you didn't talk about, what your experience was with crypto. Actually, we did post a video recently for our Patreons that goes into Vitaly's sort of story with crypto. But there was an opportunity there. Again, having the experience from Apple and Tesla, said, man, Bitcoin, Ethereum, these things are not going to stay at these levels. And we went really heavy, or at least I went really heavy. Vitaly had a pretty good
I went really heavy in 2017, 2018. And even before I was in crypto, I had Dogecoin when in 2013, whenever Dogecoin came out, I was like on the forefront of the Doge movement. All right.
He was Doge buyer number
I didn't hold it. That's what happens when you don't hold something and you lose faith in it and you sell out too early. And I did make a bit of money, but nothing compared to what it hit. Right. Nothing. So yes, crypto, and I learned my lesson in crypto. That was the big investing lesson I learned. That if you dump all your cash into crypto, and we cover this on our channel a bit, and I dumped almost everything I had, basically. Sold all my stocks in 2017, 2018, went all into crypto, and then saw it tank for the next 3-4 years straight.
Well, you know what? Before that, in 2009 or 10, we did do that mining thing for a while.
No, that's 2012, 2013.
Or 2012. I remember Vitaly called me, had some ideas, like, yo, I'm going to start mining crypto. I think we could make some money on this. I started mining in my house. Yes. I started mining in my house with all the computers there. The house was just a sweat box all day because these computers were running. And I think I gave you a bunch of money like $2,000, and we bought.
He
some
gave me
NVIDIA.
nothing. I had no money from him.
Yeah, I gave him money. I'm still waiting for the ROI.
Yeah.
But that graphics card
But
is in my computer now
it's
running this.
melted. But I
You've still
remember,
got
like,
you've still got-
and
What
but
was
at the time, it was so energy intensive. And the return on it wasn't. Now knowing what it was, we should have kept it going. But I sort of had that crypto for a while, and then when I actually ended up losing it, I probably lost maybe 2 Bitcoins and some Ethereum on a computer that I had ended up selling. So I learned a valuable lesson too. And then in 20, what was it, 20, when it ran up in 2014, that summer.
No,
or something.
The big, it ran up to 1,000 around that time, 1,200 or whatever it did, and then
No,
it
I'm saying
crashed
it's
down.
Bitcoin. Bitcoin hit 20,000 in December of.
Well, no, first it hit
2017.
1,200 in around 2013, 24. I forget the exact time. Then it crashed real hard, and I was there, and I bought the dip, by the way, and then sold it back when it like doubled my money roughly.
Right.
Terrible Bitcoin. Don't follow me into the Bitcoin trades, guys.
Basically, everyone has a really sad story about crypto. There's always a lot
really
of
sad.
pain associated with crypto.
Yeah.
So you're talking about
had this story,
2017, right?
Yeah.
2017 it ran to 20,000 and then crashed to 3,200 or whatever it went to.
Yeah.
Oh, yeah.
In
Anyway, go ahead.
2017, I bought my home. I moved to LA in 2014, and I said, "Oh, I got to get my finances in order, and I want to buy a house." I bought a house in 2017, and I remember that January looking at crypto. I think Bitcoin was sitting at like $1,000, whatever it was. And I remember looking at it, and I had seen what it did in 2012, 2013. I knew that I lost some Bitcoin, and I said, you know what? It's not for me, right? So I go and I buy this house, and I'll never forget. I was sitting there in December of 2017, and I saw the price. I was awake. It was close to Christmas time. I was dead broke. I'd spent all my money on this house and all my money trying to outfit it. And I remember looking at Bitcoin, and I saw it at $19,000, $20,000. And I told myself, it was so sad for me sitting there at Christmas time alone in this empty house. And I said to myself, I missed this. And I started doing calculations. I said, what if I put 10 grand in January, right? What if I just done it it was right around my birthday, and I did the math, and it made me so depressed. And actually that's when I started DCAing in. I knew I was buying at the top, and I just started throwing $500 here, 1,000, and watching it go down and down and down. And then it came back around in 2020, and I told myself, I am not letting that happen to me again. When Bitcoin has its next peak, I will be there, and this will buy me my freedom. And so I made sure to invest enough that I feel confident that if it hits the numbers that we hit, then we can have the early retirement and that sort of thing, just to pay back that poor guy in 2017 who was crying by himself.
Yeah, well, I think that I think everyone has a story like that, don't they? But they say the most important lesson is that as long as you don't stop investing, the people who that they do that, they stop investing. That's when they really miss out. It's
Did you miss out on crypto, or you just weren't really part of that whole thing?
Yeah, well, I sort of was looking at it at a similar time, but I just didn't know how to do it. Really, I just couldn't be bothered to put the time in. And then I had a friend who convinced me. It was after 2018, after the crash, but it was when it was like at the $6,000 support. So it was just there, and he's like, "Yeah, the support's strong." Like he told me how to buy it, and I think the next day it went straight to 3,000. So basically,
did you buy it?
Half did it.
Oh, that's even better.
Yeah. Well, I'd sort of bought at 6,000, but and then I had about half a Bitcoin, which was a lot for me because I was still a student. And then,
you're still a student, yeah, that's a lot.
Yeah, stuff happened, and I sort of cashed out of it. And you look at it now, what $30,000 now?
45,000. It's hitting the 45,000.
The lesson here is if I do want to give your audience a lesson.
Yes. Learn from our mistakes.
Well, no, it's a valuable lesson. It took me 20 years to basically wrap my head around the fact that when you have an actual valuable asset, I'm not talking about the shit coins. I'm not talking about XRP. Sorry, I have some, but it's garbage. I'm talking about like Bitcoin and Ethereum. I'm talking about Tesla and Enphase and Apple and Microsoft. Those are valuable assets. We know that. So if you were participating in any of those at any point, the best thing you could have done is like Carlos did in the beginning, the first 10 years of his investing career. We don't do that now, but just close the portfolio, ignore it.
Just keep throwing money. Yeah, just keep throwing money in it.
Keep throwing money, of course, but you don't have to pay attention to that because like services like M1, you just dump money in and it puts it into all your stuff. You don't even know where it goes technically if you don't want to see, right? Because it just goes in. So that is the smartest thing anybody can do who's just buying assets. Like when I bought my first house, I wasn't thinking next year I'm going to sell it.
Yeah.
I wasn't. That's not the process you go with real estate. You're not like, oh my god, in 5 minutes I'm gonna make $1,000. It's not like that. You know you're in it for a decade, and if you don't think you are, then you're doing it all wrong. So the real estate part I got. For some reason, the crypto didn't connect the same way until like literally 10 years after investing in crypto, not doing so well in it, and then saying maybe I should hold this instead of trading it. You know?
Well, I think
Yeah.
the headline is for your high conviction plays, see them as real estate. It's very easy to understand how real estate appreciates over time. It's also really easy to understand how you do not react to falls and dips in the market when it's real estate. But people have a hard time translating that mentality. That's why it is really good if you are invested in the markets to have your hand somewhat in real estate, because it really does give you that perspective of like Vitaly said, you don't sell these things. These are long-term plays. They're going to be worth more. Like, I can't tell you what the price is going to be tomorrow, but I know that in 10 years, it's going to be worth more. It's like that with any of those really high conviction plays, and you just keep investing them, It's almost better than real estate because you can't add more money to your house. You know what I mean? You can't increase the value of the house yourself by adding more money to it. So it's is what I would say, the bumper sticker.
You could almost say the fact that you can't sell it really easily is what gives it that benefit for the house. Whereas, if you think about stocks, you can just go on your.
Could you imagine having to go to escrow for your Bitcoin?
Yeah, a lot of people who were smart who did this crypto thing, they separate their public keys across multiple areas, like put it into PO boxes and put them into 2 or 3 different areas where they can get to it if they really want to. But it's such a pain in the butt to get there. Like the fact that we have access to like Coinbase or wherever or just right away is not actually a good thing for crypto. That's a bad thing for crypto. Because one day you wake up, you're like, you know what? I'm going to get rid of some of this. Right? Like literally, that's what happened when I sold. I don't even want to talk about how much Bitcoin I sold at when it was like around 1,000 or less. I was like, you know what? I don't need this. That was my thinking. I don't need this. Just one day, I woke up. One day, I don't need this. So I think it was
But
2016.
it was actually really hard to sell crypto back then. I mean, I remember that was one of the barriers to buy.
No, Coinbase
Well,
was
in
still around.
2016, yes, in 2016.
Yeah,
But before
so
that, it was really hard to buy crypto. You had to move your money to a different exchange. You had to move your money to convert it to something and then buy the crypto.
But Coinbase was around for long enough where it wasn't that what you're saying. Like anyone who was technical knew how to use it. Obviously, lots of people didn't, but I knew how to use Coinbase. So one day I woke up, I forgot what day it was. I think it was during tax time, which is the worst time to actually make decisions like this. And I was like, you know what? I think I have all these expenses. I'm just going to get rid of all this crypto. This was 2016, right before it ran. Literally, at the end of 2016 or beginning of 2017 is when it started to run. And then that 1,000 became immediately almost 10,000. And then it became 20,000 in 2 months. And I was like, wow, I'm an idiot. Holy schmoly. Yeah.
Yeah. So you guys mentioned there like quite a few times, just like having that high conviction play and finding those really high quality assets. So I guess, what's your process for that? Do you have a process? Do you have a checklist, or how does it work?
There is a process. Carlos, you want to take this first or?
To find the high conviction plays?
Yeah.
Well, first of all, I would say invest in what you know. Like there's certain industries that Vitaly and I know about, right? Or we're just by nature like technical guys. And so finding industries that you know about, or that you have some sort of insider information, like friends work in the industry, right? And then finding companies where there's a disconnect between what the market thinks they are and say what the company actually is. A perfect example of that is Tesla. Like the markets did not understand what Tesla was and what they were doing at the time. At the same time, there was a lot of money and interests trying to keep Tesla down. That represented a huge opportunity because it's not that it's guaranteed, but that if it takes off and they do 50% of what Elon thinks he's going to do, then that this stock's going to explode. I don't know that anybody really expected it to take off the way that it did, even though we all really believed in it. Because I think anyone that's holding Tesla now still feels like they should have had more. And then after that, you dive into the financials. You have to look at the companies. I mean, you're buying ownership in these companies. And I think people forget that. They think I'm just buying these shares. But if I was going to invest like we're talking about doing an investment with Amit, we want to know certain things about the company before you just go and hand over the money. So it's part research. And this was in a video we're about to release. We talk about how people want to be told what to do, or they want to skip the part where it's hard work. It is hard work. It's not just pushing a button on your phone and throwing your money and hoping for the best. This is your hard-earned money. And if you have a family, this is your future. So that's what I think it is. Identifying the companies where there's a disconnect between what the market values it as and what you think it could be, and then doing the research and the diligence to make sure that the company, on paper, that the numbers make sense.
I'm going to add to that. I agree with everything Carlos said. The one thing I try to do, and it's really hard, and this is Peter Thiel's thing from Zero to One, where he says, you're looking for monopolies. That's what we're looking for. And we, as consumers, we might hate monopolies. Like we don't like Microsoft, we don't like Facebook. But when we're investors, put on the investor hat, I'm willing to buy any monopoly that I can find. And so going to Tesla, everyone thinks of them right now, even right now as a car company. I know the perception is changing, and when it was 40 billion, it was easier to say. For when me and Carlos were talking about it, we were like, look, they're doing autonomy. They weren't doing robots yet, but they were doing like energy. So we're like, they're
batteries,
doing
right?
So many more
Solar.
things than what the market is saying they're doing, and they're taking over. Because in the real world, I would see Teslas starting to pop up, and I'd be like, that car looks beautiful. I want that car. I've never driven one. I want it though, and now I have one, and Carlos has one, right?
Yeah.
That's what happens when you invest in Tesla early, right?
Yeah, exactly.
The stock buys one for you.
And besides thinking about Tesla, let me talk about a different company. I want to talk about Enphase has to come up in this episode.
Yeah.
What do? They do the little things, the microinverters underneath solar panels. Okay, I think it's a monopoly or a duopoly. There's another company called SolarEdge. So this is what I'm looking for, like everything Carlos said, but you have to find the sort of who is the winner, who is the clear winner that's not yet understood by the market or not yet being priced as the winner 10 years from now, right? So back to Enphase, they're doing the little microinverters underneath solar panels. And if you look at how much market share they have right now, it's 40%. But if you look at the entire market, it's 1% in the United States. And meaning even the world is like 1 or 2% people have solar. It's really small market that can take over energy, like the energy production. Like, and me and Carlos did another episode where we looked at how much is an energy company worth? Just one. Remember that one? What was the smallest amount that the market
89 billion. 89 billion
89
was
billion.
Wow.
a lot of
And
money.
this company is worth right now, I think 20 billion or 25 billion. So, but remember, this is the beginning of an industry that can take over the world, not just the region. That's the thing, not just like Europe or not just like the United States. So I think we're looking for those S curves, the monopoly, and to what you said, we have to understand what the technology is, because like Enphase, I can get little microinverters under thing, batteries I understand, and then I'll give a counterexample, which some people might not like when we watch your video, but Palantir I don't really understand yet, and I'm a technical guy, so. Even though I have shares, I just don't fully understand what they do on a day-to-day basis. I sort of get that Enphase makes these microinverters that go into solar panels. I understand that they make batteries that go into your home. Every time I ask somebody,
it's something tangible that Mike, they can show you the
tangible.
microinverter. You can hold
Tesla
it.
makes a car. I can see it's sexy. I want it. There's a product there. And so it's harder for me to get behind something like Palantir in the same way I am behind Enphase. And if you look at just my portfolio, if I showed you the percentages, like boom, Enphase is like 30-40% of the portfolio, and Palantir is like a little tiny sliver, you know?
It's proportional to the amount that you can understand the business.
Right.
Yeah.
I do want to show something.
Beautiful S curves.
Yeah, this is an S curve. So the other thing that I like to do, or when you're looking, a good recommendation would be try to find companies that are in this area of the S curve. Like Microsoft, like all those companies that exploded in the 90s, they're all here now. They've basically turned into value stocks. And so that's why, a lot of them will pay dividends now. Like even Apple, I would argue that Apple's not really a growth company anymore. They'll have pops, but they're predominantly a value company. And like Vitaly said, a monopoly. Who's going to be the next Apple? There is no next Apple. So you try to find companies that are here in this lower part of the S curve. And the tricky thing with that is that's usually when they're most vulnerable to FUD and or competition. But if they break out, there's no stopping them. I mean, that's why it's an S curve. It becomes something that's every other company will be trying to chase where they were 5 years ago. And that's where Tesla is now. I mean, right now, there's no company that can make a car as good as the 2012 Model S. That should give you real confidence to put more and more of your money in there, right?
Well,
and that's how you make the big gains.
Remember, it's not just a car. It's the fact that they're doing autonomy and they have battery. So to make it clear, I'm not investing in Tesla only as a car company. It's because I know they have 10 other options on the future, right? Like a call option on all these different things that are almost for free right now, because the car business itself might be worth more than $1 trillion. That's
what I'm saying. We've run the numbers and that they can hit 2T just with cars.
That's what I think, yes.
So you can get an easy double just with the cars. They got 2 new factories online. That's going to be...
It could have been a triple like 3 weeks ago or 2 weeks ago.
Yeah.
It's gone up like crazy.
I'm still got soldiers on the side waiting. I think there'll be a pullback after. I think there'll be a pullback after earnings. I think it's run up a bunch. and I think there'll be a pullback after earnings. And
you think
if you
it'll
see it
miss
spike the next day, it's not Kathy Woods, it was me. Kidding.
Do you think it'll miss the earnings, or do you think maybe inflation risk, or
Miss their earnings?
No, this year they're gonna murder this year.
They're
why do
going
you think
to
it go down? Just
I don't know. I don't know if you want to. Well, let me say it a different way because you might not like that word for the channel, right? They're gonna totally destroy this year, meaning like they're gonna kill on numbers. They can't produce enough cars. They've said it. If you look, I've pre-ordered a Model Y. It got pushed back to September, October.
Me too.
It's like they have so much demand, they can't even make it. So the earnings are going to be the maximum that they can send out these cars.
But also they're doing something really smart where they're now prioritizing customers. Like Vitaly and I have a mutual friend that pre-ordered a Model Y and it was set for August or September. The moment he upgraded it to the performance model, it's coming next week. So they are prioritizing the higher margin vehicles, and above those higher margin vehicles, they're prioritizing the customers that order FSD. That's $12,000 of free cash on top of what they're already making. So
Right,
their
the
margins,
30%, the 30% gross margin goes to 40%. I don't know.
I don't even
there's
know
a
what that's going to
subscription
be.
fee as well, isn't there?
Say it again.
There's a subscription fee, but I didn't subscribe to it. But it's
okay.
it's nothing compared to what they're making on FSD. The point is they're doing the right moves now to make sure that they absolutely hammer and crush these their earnings and delivery estimates.
Yeah, because I've heard sort of people compare Tesla almost to Apple. It's going to like create this ecosystem where there's just all these network effects, as you said there. There's like, obviously there's going to be the cars and there's going to be solar panels. I think they've been talking about phones, potentially robots, like all these different things.
Social media. I don't know if you've been following. He's going to make
it
it on social media.
Make his own Twitter. That'd be interesting.
Someone had a great thing because
I don't know if I want to own that. I don't want to own Twitter.
Someone tweeted at him that he should change the bird to the Dogecoin dog, and they should, instead of tweet, they should call them barks. I thought that was pretty clever.
Yeah. Could you imagine Elon, like, I don't know, he's talking about free speech, but imagine if someone like threatens someone. I guess that'd be the risk there.
Well, that's illegal.
Yeah.
Like there's no free speech that protects you from saying I'm going to kill you.
Yeah, exactly.
I think like the don't be an a-hole. Like that's a pretty easy rule to follow. I think everyone kind of gets what that is, right? Just don't be a jerk.
Yeah, if only everyone followed it. Eh?
Yeah, have you been on Twitter? Okay.
Yeah, exactly.
Oh yeah, that's why I say that.
Worse than
It's
YouTube.
so easy to be. It's so easy to be an a-hole on Twitter.
Well, yeah. Well, it's almost like some people, they just make those provocative posts, and you start typing, and you're like, "Hang on, this is what they want. They want me to respond and to give my point of view to like increase exposure for it." I guess that's the issue with like sometimes the finance, social media aspect of it, isn't it?
You're saying.
I want to bring up actually with what Warren says about Elon innovates with extreme urgency, and I agree with him there. Like everything he does is like, let's innovate, let's go to the next step right now. We're not waiting. We're not waiting a year cycle to figure this out. We're going right now. We're going to change the car. This piece is not working. We're going to change it tomorrow. We're going to release a new piece. When you look at all the other car companies, like you look at Ford, you look at GM, that's not how they operate. Yeah. So even if you weren't bullish on autonomy and you weren't bullish on robots and you weren't bullish about what else tests energy business and you think that's nothing, there is no one innovating like this company. So if that was one thing that I would say to investors, why there's still money to be made is because Elon is innovating at an incredibly fast rate while everybody else is sitting by waiting for like their yearly updates, right?
Yeah. And like
incremental, incremental, small
updates.
Incremental update. The other thing about it too is that there is a lot of information about Tesla. Like them or hate them, there's a lot of information out there. So if you want comfort in your investment, there's so much available information, whether it's YouTube channels, which a lot of it is that, just like YouTube channels or even people on Twitter. You can find a lot of information. A lot of the investors themselves parse this information and dish it out to everybody. I mean, like we only know that there's about 1 million or so Cybertruck reservations because someone started a Reddit page and people fed it themselves, right? So it just, in terms of being able to be transparent, or not even being transparent, in terms of available information out there, there's so much that you can find that's just put up by investors and or customers for a company like that.
And that's so important. Like when you have those conviction plays, isn't it? You want to do so like research into it rather than just hearing something and just buying it straight away. You want to do that research yourself.
I hope you're not just hearing something and buying it straight away.
Well, I read this thing where apparently 40% of investors they invest like within a day of hearing or thinking of an idea, if you can believe it. So,
I mean, yes, that's speculating, and I've done plenty of it. Don't get me wrong, but the high conviction plays, there is so much research that goes into even keep those convictions today. Like today, if you looked at my portfolio, like I said, I have Tesla like 36% and then Enphase 36%. I am studying those two almost daily and talking to Carlos 4 hours a day about those two. It's like, yes, wherever most of my money is, that's what I'm discussing at like 90% of the time.
But it's also you don't get to a position like that right away. Like I don't know about you, but I don't have $250,000 that I'm going to dump into Tesla when it hits $700. I need time to build it. I
Yes.
need time to earn the money. And so the more like you only get to those positions over time. And if you keep seeing good news or if you keep finding more reasons why this is a great place to store your money, you just keep growing, you keep adding to it. These big high conviction plays are not something that happens overnight. Like you said, one day you hear something and the next day you invest. It takes time, and that builds confidence over time as you see it perform, right? Get more information, you get more bullish on it, you start adding more money, and then eventually one day you wake up and it's 40% of your portfolio.
Yeah, there's another point to make that when there's a downturn like just happened, me and Carlos were buying Tesla. We weren't selling Tesla.
Right.
So somebody's on the other side selling it. Remember, right? When it was dipping down from 800 to 700, I bought at 800 a lot, and at 700 I bought again a lot, and I thought it was going to 600. I was hoping actually, because I was going to
Yeah.
go buy even heavier. I was telling him, dude, I'm going to go so heavy at 600, and of course it reverses at that point. But the point I'm making is that you go heavier into positions you really understand and believe in when they're dipping, because we have such high conviction in it that we don't care that it's falling. It doesn't matter. And the fact that Enphase right now, if you check the chart, it went to $200 recently, and I was buying it all the way back at 20. I'm like, no, I don't want that. I want it to go down. I want people to not understand how good this is because I want more of this, right? Because I know it's the 5 year, the 10 year time horizon where I walk away a millionaire and not the like 6 months. It's not that. It's not the year. It's the long term gain here.
Yeah.
But
I think that's
also,
a lesson
I
you learn.
noticed
Like,
too.
oh, sorry.
Just one final point is that I also noticed that with my high conviction plays, my exit strategy is a price target, not a time frame. So as long as Tesla is below whatever $1,000, I'm a buyer. I'm just going to keep buying with every available cash that I have because my exit strategy is my exit plan is somewhere 3,000, 5,000, right? Assuming it doesn't split 10,000 a share, right? And so it doesn't matter what I bought it at now if I'm thinking it's going to be worth 5,000.
Yeah. And you, as you said, it's so vital looking 5-10 years into the future, especially if you want to be, wealthy.
Oh, yeah, there's no other way to do it. If you think you're going to you had your chance in 2020 to 2021 to become a millionaire. Like that year could have been that could have been the year.
Yeah.
But if you didn't get that year, every other year is basically a grind up. Let me put it this way, right? There's no easy money to be made. And I think I learned that early on from real estate because I understood that intrinsically that there is no easy money in real estate. I have to literally go fix the toilet, okay? Work on little shit, okay, if I'm allowed to curse on your episode.
Yeah.
And then after 10 years of working on shit, I can get something real out of that. So I sort of get that with real estate, and it took a long time to get that with stocks, but now I think me and Carlos both understand that intrinsically, like we get it. And that's why it doesn't hurt so much when things fall apart and
Right.
it dips. We're just sad we don't have enough money to keep buying. That's the only thing we're
Yeah,
sad
or
about.
yeah, to get the position.
Not,
I actually
not a
have a
bad
question
problem
for
to
you.
have.
I actually have a question for you.
Yeah.
So we've told you what brought us to YouTube, right? What's your origin story? What brought you to YouTube? What made you decide I'm going to turn this camera on and start talking to people?
I don't know. I guess I'd sort of done
What
quite
video
a lot of.
inspired you to? I'm kidding.
No, yeah, exactly. I watched, Freelancer Finance, but I loved you guys. Yeah, we'll watch the episode, watch the show. But no, I think I just I talked to I was at university. I talked to a few really interesting people investing. I was really looking to go into it, and I'm like, okay, how can I guess leverage other people's knowledge, not just from listening to sort of episodes online and podcasts, but it's like how can I actually maybe talk to someone, learn from them. And I guess it was almost like from a selfish point to start with, like I'm going to pretend I have this podcast and people listen so that I can actually ask these great people some questions. And then from there, it's actually like, hang on, this, people are finding this useful and they're getting value out of it. How can I maybe, look at it from my perspective as well as viewers. So I think that's sort of how it started with me. It was like almost a way for me to get into the industry and to learn more just through interviewing people.
Well, you're obviously starting your investing journey because at 26 you don't have a lot of money, obviously. But what are you currently, if you are investing, and what is the game plan? Do you have a job right now? Are you going to actually take that 50,000, 60,000 a year job and invest And how much are you going to do it? That's what I want to know.
Yeah, that's a plan. Well, I have sort of a graduate job lined up when I graduate. So go to London, and yeah, from there, hopefully, I
What
was
field
actually
what are you studying?
so I'm studying management and finance, and then I've got a job. Probably focus more on my portfolio. Then I'm being similar to what you guys say. You follow these companies. So I don't have that much invested now, but I've been following these companies for quite a while. I've sort of been narrowing down a few that I'm really have a high conviction on, and from there I'll start investing. So I think that's what I'm looking to do at the moment. Sort of have a little bit in crypto as well. That's where I started. I also used to do Forex sort of swing trading. So yeah, a little bit everywhere. But I think that's sort of my plan. It's actually, make sure, spend the time, understand these companies, do the research, and then from there, get a job, save up, invest, potentially real estate as well. So I think, yeah, and then the job's for 3 years, hopefully. So after that, then I can sort of reevaluate and, if the podcast's doing well, do it full time.
What are your high conviction plays? I'm curious.
So I have a few. I'll bring up the chart. Let me have a look.
If he says lemonade, I'm gonna jump out the window.
I bet you it's Palantir.
It's like I'm out the window.
It's Palantir and lemonade. That'd be awesome.
I think Palantir is interesting. I've sort of jumped on the Amit bandwagon. I don't know if it's just because he's really convincing and he's sort of sold me.
He's really good. He's really good.
Yeah. But it is. I've sort of been doing a bit of research in it, and I do like it. I've actually been looking at Tencent as well, which is Tencent. So
they have that
company,
deal with
the Chinese one. So I guess the risk there would be obviously risk with China.
Delisting, yes.
Yeah, delisting, which would be a massive risk. There's also a few UK ones as well. So which might be because I'm based here, and I guess I can talk. I probably haven't talked about them at all. One of them's called Ocado.
I see you have Piton. How much do you have in that?
Oh man.
So I did an internship, and it was the first stock I recommended for the company.
What?
at about 110, and luckily it went up a little bit, and then I think it sort of broke even, thankfully. And then it's
oh man,
down.
crazy.
Yeah,
a lot of people lost a lot of money in that.
I bought into the hype about the network effects that it builds and the brand and stuff. But yeah, Ocado's like they do all the back end.
So remember the monopoly discussion? This is like Peloton is a perfect discussion for will it be a monopoly? Will an exercise bike be a monopoly? Like the answer is no. Like there is no who believes that they would have benefited by being a monopoly? It can't. Like so.
Yeah.
If I talk about Palantir, you know what? Palantir might become a monopoly for this AI machine learning thing. One of like
they already are. I mean, if you think about it, they already are.
Well, I mean, 10 years from now, when all of this is much bigger, right? We got to think about it that way.
But you also know that if it's the government is the slowest to move on anything. And if Palantir, like in other words, the longer they stay with Palantir, the more value they get from that service because now you have more and more years. Imagine trying to switch that over after 10 years of using Palantir software. It's going to be virtually impossible.
And I think the thing as well with that, probably it's actually made them like be able to survive. It's made them profitable. So
you have to sign up for TradingView. You have to pay for TradingView.
Okay, so you have QCDDY. I'm not sure what that is. Ocado Group.
Ocado, yeah. So that's this is like a UK. Have you heard of Ocado?
No.
Is that OTC?
Yeah. So I think it's OTC in America, but it's on the London Stock Exchange. So it's basically just so you can trade it in the US basically.
What do they do, real quick?
So they sort of do all the back end fulfillment centers for food deliveries. So I think they build fulfillment centers for Kroger. I know they're big in the US, so they basically do the factories for them to pick shopping and deliver it to people. So if Google, one of their warehouses, it's actually crazy. It's basically fully robotic. They have these little things that go around picking food, putting it into shopping, and then their plan is to actually basically do the whole delivery or automatically.
Like something that is a possibility of being a monopoly because they have it's logistics, but it's really hard to implement that kind of back-end stuff. So
yeah,
they have, I mean, I don't know this company, but I like at least what you're saying. If it was versus Peloton investment, I'd be like, well, this is a better bet for the long term.
And they have heaps of contracts. They have contracts with Kroger and
look at that.
Yeah, so you look at that, it's mental, and they have contracts with some of the biggest supermarkets all around the world. So France, UK, I think Japan, Sweden, Spain, Australia. So they're basically all over the world. They've got this technology, which is pretty mental.
Is this actually, I can't tell if that's a 3D thing or is this?
No, that's an actual. So that's
that's real. Okay. So the grocery bag is on the bottom and the machine is loaded with stuff and it's divvying them out to the different.
Yeah, exactly. So each of those little area, they call it like a grid. It's pretty cool. So
Yeah.
each of those areas are like different food basically. So they pick it up and then they put it all together when they're shopping for people's orders. And then I think at the moment from there it goes to a human. So they put it in the bags and then from there it goes to a human. But their plan is basically to do everything from packing with robots to delivery with robots. So they're going to do everything for these companies. And I work as a part-time job, I work in like a call center for one of the supermarkets in the UK. And their system's horrible. Like I experience it every single day. It doesn't work. It's they lose so much money off mistakes and everything like that. So I see this and it sort of blows my mind about how good it actually is. So I guess that's another thing as well, like my insights into the actual business.
So can you walk me through it? Are they putting it into the basket or are they taking it out of the basket? Which way
They're
is it
putting it
going?
in. So it's
So I think
like
they're putting it. So they're sort of picking it
Yeah.
up. They go around to all these different areas. They pick up the shopping, and then once they've completed it, then they take it somewhere else. I think.
They put it in the right basket. That
right,
basket
like
goes to a
the
human.
basket for the customers at the bottom, and if that thing has wine, it'll drop off a bottle of wine, right? In each.
Yeah, but it has to get the groceries from somewhere too. So that's probably another basket where all the groceries are. It gets those
Is
groceries.
that what that is? That's
I
what
think
that
that's
that is
actually
right
in
there.
the machine. I'm pretty sure.
Is that what that is right there? Like where they're
Yeah,
loading.
that's like they're sort of like picking multiple shops at once, which is pretty
Right.
crazy.
I
Yeah,
mean, something like this looks like it has a chance of succeeding because it's so
Yeah.
complicated and meaning we understand what's going on and not complicated in terms of like we get it, but just the logistics of this and the robotics and the autonomy and all this that's happening. And if they're the best at it, I could see why, like you said, Kroger or Google or whoever needs this would do this. I could totally get it. Yeah.
Yeah, and you imagine like the billions needed to invest in that. Like these supermarkets, their sort of margins are so razor thin, they're not going to have the money, the capital to actually be able to do that. So it's easier for them to outsource to someone. They basically do everything. They have all the information, all the data, and go from there. So I guess that's sort of like a company. There's another one called Wise, which is like international transfers of money, and it just
I
saves
heard of that
money.
one. Yeah.
Yeah, so that's one I use, and I've saved like hundreds of dollars or pounds just from transferring money from Australia to the UK, just from using this platform. It's great. So,
Well, what about PayPal or Square? Because obviously they're big in America. I know they're not as big in Europe, but aren't they growing into those countries faster than Wise is growing out of them?
yeah, they sort of are. I guess I probably haven't used it for the same thing. So I think the thing that I really like about Wise is that you can open bank accounts in all different countries. So say I could open a bank account in the US. I have a bank account in the UK. I can literally transact between these bank accounts within the app. So, and it's almost instantaneous. So before, if I used a bank or even PayPal, like I think PayPal has a bit of a fee, quite a high fee. The bank, it took like over a day plus ridiculous, sort of rates plus a higher fee. So this, I can do it in like 5 minutes, transferring from Australia to the UK, like that.
How does it deal with the exchange rate?
So it does it all in the app basically. So I think basically how it works is because it's all done within their system rather than transacting between different banks,
Institutions, right?
institutions. Yeah, that's sort of where they really save it. So they've built that scale, and I think you can open it up in multiple areas. They have their own debit card and I think a credit card and business accounts as well. So I guess that's sort of where the value is, but I guess as you said, the risk is there's quite a lot of competition. What's their sort of point of difference?
We've talked about PayPal and Square, and I have a big position in both of them, like way bigger than I thought it was in this recent downturn, if you've been following them.
Yeah.
But I sort of agree. It's kind of hard for me to say who is the clear winner in 10 years on who has a monopoly here. Once again, I go back to that. I don't think any of them actually have a monopoly. So as soon as I get my 2, 3, 4x, whatever it is, I start selling out of shares out of those companies because I don't have as high conviction that they're going to maintain their lead for a decade or more. I'm not saying they won't be big. I just don't see it the same way I see like a Tesla or an Enphase. Going back to that, like if I think Enphase could make $1 into 10 and these guys can only make $1 into 3, well, when it makes $1 into 3, I'll pull it out and go into something else, you know?
Yeah, and I guess the risk there is Visa and MasterCard are massive as well. So you got those already like big competitors competing against all these guys.
But they own the network, so I think all these other players are on top of them anyway. So I don't.
True.
Visa, MasterCard benefits from all these transactions right now.
Yeah, true. But yeah, I guess those are a few things that I'm sort of watching, and yeah, as you said, it's just building up that conviction over time. I guess you guys, but obviously you mentioned Elon Musk quite a bit, who's a great manager, a great practitioner. Do you sort of look at other management as well when looking at investments, or Is that important to your philosophy or not really?
You're saying that the CEO or the manager?
Yeah, so it could be like CEO. Sometimes, people look at them, the CEOs and managers, what they've done in the past, their track record, maybe ownership. Is that important to you guys or not really?
It is to me. It's not the only thing. That's the thing.
Yeah.
Like with Elon, it's a special case. We could all say, but I'll give you an example where SoFi. One of the reasons I'm investing in SoFi is because Anthony Noto's background, the guy who's CEO of SoFi,
Yeah.
his background is from Twitter. I think he was CFO. I forgot what he was at Twitter, but my point is he has a pedigree background. I see what he's doing at SoFi, but am I betting strictly on the fact that he is such a good executioner? That's one part of it, but I also see the other parts of the business, like we talked about Galileo, which is the back end thing that they're doing. I like those parts better than necessarily the CEO. But if the CEO is a turd, then you bet your butt it doesn't make sense to invest in it. I'll give you a great example. Nikola.
Yeah.
If you heard, what's his name? The
Trevor
Nikola
Meltdown
CEO?
Milton.
Trevor Milton. If you heard him speak and you believe nothing he says, why would you invest in that company?
Yeah. And then it's he's going to jail, isn't he, or something like that? It looks like.
I think he's in court, but you see the point. Like, there's one guy you believe what he's saying, another guy you don't. So it does matter, but I won't say it's the only thing that matters to me.
Yeah. And I think that's the important thing. It's like building this, as you said, it's building these multiple layers of different things that you're looking for before making these investments.
Look, having a CEO that I don't necessarily believe wouldn't necessarily be a barrier to investing, but it will be a barrier from getting over a certain amount. Like Elon Musk as a person is a huge part of the reason why I'm so heavy in, and also because I can't invest in SpaceX right now. See, and I can't invest in like boring companies. So you kind of go all in. But I believe that Elon Musk believes what he's saying. That to me is really important, right? So an example would be like the CEO of Lucid. I don't even know the guy's name, but I don't believe him. I don't believe when he's talking. I don't believe what he says about the company. I don't believe that he wakes up every day trying to solve the mission or the stated mission of the company. So that is for me, I wouldn't invest in it. But I take another company that we're both invested in, Arcimoto.
Well, before we go, Peter Rawlinson, I actually do believe in him. He did a tech talk before we move on to Arcimoto, but he did this tech talk explaining how the car works. He has proven himself to me, at least, that he's a very intelligent CEO. He knows exactly what his company is doing. So I'm not investing in Lucid, but I would say he's one of the more believable CEOs in my opinion.
You watch him on an earnings call, or there's a couple of interviews that he's done with CNBC, and this guy's like reading off a prompter. He looks really nervous. He looks really scared. Like he's got a lot of pressure. That is not, he doesn't seem like he's the leader at Lucid. That's what it comes down to. I might believe, sure.
Maybe he's growing into it. Maybe he's growing into that position.
I would say someone like Karp from Palantir is growing into the position, but I don't think there's a problem there with his personality or his personal beliefs lining up with the mission of the company. I believe he's invested. That's one of the reasons why I could invest in Palantir, right? Even if I don't necessarily understand everything that he says or believe his way or like his style, I still believe that he believes his mission. This guy from Lucid, I don't buy it. I think this is a cash grab. I think that, now that especially now, and it doesn't mean to make this a Lucid thing, but in the last earnings, they lowered their estimates for the delivery estimates. I think they knew this all along. I think this, and if you look, his compensation package is tied to the stock price with no metrics attached to it. So no sales estimates, no delivery estimates, just the stock price. That worries me. Okay. On the other hand, you look at you look at a CEO of another company that we invest in, Arcimoto. You look at Mark Frohnmeyer. If you've seen our channel, we've interviewed him several times. That company has a really tough road ahead to not only being profitable but being successful in the next 10 years. But when I listen to Mark talk,
Can you explain what the company is? Sorry, I haven't heard about it.
Arcimoto makes
show the image. Show let's see it. Let's pitch our stock.
Here you go.
This is not financial advice. The fact that
what's funny to me is that shows you how like ubiquitous I think Arcimoto is, that I didn't even feel like I needed to explain it.
Yeah,
right?
Exactly.
It wasn't me just trying to show you a stock that you don't know, but it was something where I'm just like, oh, everybody knows Arcimoto. But the fact that you don't tells me that there's still money to be made. So this is Arcimoto. This is Arcimoto. I'll refresh so you can see, because they say it their best. They build rides. They build ultra-efficient three-wheeled electric vehicles. They just announced a small, like single-person or maybe two-seater, this one, the Mean Lean Machine, which is going to be a competitor to Peloton because it acts as a stationary bike that you're pedaling, charges the bike, and then you can use the bike to move. They have different variants of their machines. So it's basically the same platform. Here's a deliverator version for last mile deliveries, a rapid responder for EMTs. They have different versions of it. If you listen to this CEO talk, and we have several interviews. If you listen to the CEO Mark Frohnmeyer talk, and we have several interviews with him on our channel, you believe that he wakes up every day trying to solve the mission. And that's when you're investing, like the company is not going to be any stronger than the leader. And so if Elon Musk is sleeping on the floor of the factory when he could easily be in a $10 million mansion, or if Mark Frohnmeyer is getting up on a Sunday morning to talk to two guys with, a finance channel on YouTube, that shows me his conviction in it. And I can't be more convicted. I have more conviction in the company than the CEO. So to that extent, it might not be the only reason why I invest, but it would definitely affect how much.
Yeah, if the CEO doesn't believe in it, what you said, the CEO himself, like you're like, oh man, I really don't want to. I don't want to put anything here.
We've said this several times. Me and Vitaly will watch interviews with these CEOs, and we ask ourselves, like, what is this guy like in a meeting? Like, imagine what this guy is like in a meeting, right? If they're overly verbose, or if they're just nonsensical, or not confident. Those things do tell you something about how the company's ran. To Vitaly's point about what he doesn't know what Palantir does on a daily basis. Right? Meaning, like, when they go to work every day, what are they doing? What's happening between 9 and 5? Not understanding that is tricky to invest your money in, right?
Yeah. So you're just not sure about the software, or just what they're developing in the future, or I guess there is. It's one of those companies. There's so much secrecy behind it. And I guess that's the issue of some of these tech companies, especially. There's just secrecy that you can't really see.
Well, with Palantir, like the nature of the work that they do is secretive, but I don't think they're secretive about what they do. I mean, they're a data-driven software that helps people get information from the data. And in a nutshell, it's like I can ask questions of this data, and it can give me an answer that would take me a long time to figure out just from the data points, right? In a really simple way. It's probably screaming at the screen right now, being like, "That's not what they do.
I shouldn't have recommended them.
I shouldn't have." Exactly. But essentially, they allow you to get real world simple answers from a ton of data that might not make any sense to a human, right? So I don't need to know much more than that, right? But to Vitaly's point, I don't know what that looks like on a daily basis. Like, what are the people at Palantir doing,
Okay, let me see if this is it. Okay, so I'm going to hopefully preface it. I'm going to preface this. This is Peter Lynch. Everyone, I think you've heard of Peter Lynch, right? And I hope I picked the right spot, but basically he tells you when he invests in something, he has to understand it, that a 6-year-old has to understand it. And if I am looking at Palantir, there is no way I will ever, and by the way, my background's computer engineering, computer science. I would have to spend a long time to understand Palantir, a really long time. It's not as simple as saying buy Dunkin' Donuts. And that's like the Peter Lynch mentality, like you get it. They have coffee and bagels, okay? You see a line outside, they're doing well, right? So let's see if I found the right clip here. That's our Discord, everybody, pitching in on the channel. Well, we have information. I actually went to our Discord and found Peter Lynch's link. I'll definitely put this in. Okay, so this is Peter Lynch's interview and some other graphics here somebody put together. But let's have a listen. I think this is the part.
A lot of fun. These principles of investing have worked well for me. I hope they can help you. You can't just go out and buy a stock and hope it goes up. You have to have a reason why you think a stock will go up. You should be able to tell those reasons to someone else in just a few minutes. People who love stocks don't talk about sports. They don't talk about their dog. They talk about stories. A story is what's happening inside a company and signs that point to what's likely to happen in the future. You got to be able to put it down in 2 paragraphs. It could be something like earnings are turning around, a new product, somebody's gone out of business that was competing with them, they've just discovered oil, they've got new management, their balance sheet's getting better, they're getting rid of a losing division. There's lots of different elements, but that's what a story is, and that's what you rely on. A good story is one that you could tell a 5th grader, and he or she would understand. The more complicated the story, the more likely it is to fall apart. You just need one good, simple story to buy a stock, and then follow that story. Read through the story that I wrote for Toys R Us back in 1978. You didn't need a degree from business school to realize this company had a great formula and had lots of room to grow. The thousands of people who shopped there knew the store was great. I did the rest of the research I needed to fill in the story and bought the stock. Building stories like this one is how I decide what companies to own and which ones to stay away from.
Well, you could put a link. He obviously talks about Toys R Us, which didn't do so well 30, 40 years later. But the point is,
but then he
made a
was long
hell of
gone.
money.
He
Yeah.
was gone.
He got his 20x, he got his 30x, he moved on.
Yeah.
There's a lot you can learn from Peter Lynch, but my main point, he even has another video where he talks about Dunkin' Donuts. That's the one I brought up. That if I look at Enphase, I want to just go and Tesla. I understand the story. I get it. In fact, I like the story. That's the world I want to see, right? When I look at, I'm sorry to pick on Palantir. When I look on Palantir and Karp is talking, I have no idea what he's talking about half the time. I have to go now do 50 hours of research about, is this the right thing? Do I understand what they're doing on a day-to-day basis?
Someone on Discord breaks it down.
Yeah, someone on Discord has to, like literally, someone has to go explain it to me like a child. This is what they do. And in fact, there's a cool video with, the U channel, the U channel guy.
Yeah.
U-Ticker guy
Yeah.
with Code Strap, the guy from Palantir. And they have a really technical, awesome discussion. And then I'm listening to it and I'm like, no one will understand this.
Yeah.
Like they go into the nitty gritty of it. And I do get some of it because like I have that background with engineering, but I'm like, oh my God, you cannot sell this to anybody. This company will have a really hard mission just conveying what they do, even if it's super important. Don't get me wrong, they could be super successful, super important, but then they have this other barrier. Tesla, look at this beautiful car. Look how fast it goes, okay? We're going to put a nice little battery in your house, buddy, and you're going to move on. Enphase, we have little inverters that go underneath your solar panels, and guess what? You're going to produce free energy for the rest of your life. The story is simple. It's not as simple as Dunkin' Donuts, but to me, it's a simple story, and while the other one is a really hard one, right? So
the flip side of that is that's for retail investors. I agree with you. Like retail investors need a certain amount of information dumbed down so they can understand. But there are industries that do really well without any retail. I mean, I'm not saying there isn't retail, but like a company like Lockheed Martin, I don't really know what they do every day.
Bombs.
You see planes and missiles and bombs, and they have defense contracts. Same with Boeing. The only part that we see is like the 747s and the plane, but they do so much more than that. And they can do really well to the point where they're now just, a solid dividend stock just from institutions. Like institutions have people at the companies whose job it is to understand that. And so sometimes all we need to do is follow what those institutions are doing, right? Because, for example, one of the reasons why these, like a Palantir or something is so successful is because Kathy Woods puts millions in. So it's almost like she's vouching for it, right? She has one of the best, she's one of the most educated, well-researched.
That's why I bought, by the way.
Kathy Woods. And so you say, so it's both, right? If you want to get the holy grail is having a company where the retail investors can understand and institutions are dying to get in. That's what Tesla is. That's what Tesla is becoming. But before it was sort of propped up by retail, but you don't always necessarily need that. Like there are some companies.
To your point, the disconnect with Wall Street, they didn't understand what Tesla was doing back.
And retail did.
And retail understood what Tesla was
so
doing.
Many millionaires now.
Exactly. That's why a lot of millionaires were made. So when you find that disconnect for anybody, that people don't get it and some people do, maybe Palantir is that thing and I just won't get it. And I might not make millions on Palantir. I'm okay with that because there's lots of opportunities in the stock market. But yes, somebody has to get it, whether it's Wall Street, like you're saying, Carlos, or it has to be retail has to get it. Someone actually has to fully understand and buy the story. And enough people have to buy that story because Tesla would be dead right now if it wasn't for retail just holding on and waiting the decade.
50 billion for 10 years. Yeah.
Yeah. And just staying there because it was in one spot literally for 10 years. Okay. So,
but if you look at the top performing assets for guys like us, it's always been when retail is first. Like even in 2020, retail was there holding up the entire crypto space. Retail investors were holding up Tesla for 10 years. Once institutions get involved, then it's a different ballgame. So the real winners are when the retail investor knows something that the institutions don't, because then they come in and they throw gasoline on the fire, to use one of Mr. Wonderful's quotes,
And I think the thing there as well is the institutions, they actually can't invest in them sometimes because they're almost too speculative and they're too risky for either their portfolio or say with crypto, they just don't understand it and they can't do that. So yeah, as you said, once they do come in, say it's, become more popular, the market cap's gone up, etc., then that's when it can really see the massive growth. Which
right.
is what we saw
for
with
us,
Tesla.
right? For guys like us,
exactly. Because you think about Tesla, like before 2020, it was really struggling. I remember it had like a massive down. I think it went, below 200, and I think people were saying, it's done. It's not going to recover. And then what do we see? It's gone up by a ridiculous.
Well, they were
amount.
3 weeks from bankruptcy trying to get the Model 3 ramp up. That was a point where had it gone any differently, the company would be gone, right? But that's why if you had your money in, you deserve all those gains.
To all your guys' points, so retail can't always do what Wall Street does, and I know you're becoming a financial guru here in some respect, but when Wall Street does DCFs on these companies that are unprofitable, I mean, they're sort of shooting themselves in the foot where retail can win. No one invested in Tesla in 2019 because if you did a DCF on it, you would see that you would be bankrupt in in like a year or two.
Yeah.
Like if you
Compare it
worked
to
out
like
the
competitors as well, like normal car companies, they're worth the same amount and they have so many more sales.
Exactly. And so when people do these DCFs, and I've talked to Wall Street guys, by the way, about this. I won't say who, but I have talked to them. They said that shit is bullshit. Okay. And they know it's bullshit. But the fact is, they can't tell their clients and their corporate clients and their other investors who are retail who have a lot of money to go buy this company because we believe in it. They can't do that. So they're stuck in a rock and a hard place where they have to say, look, the numbers work out where this is not worth this amount. Tesla should be worth $40 and it shouldn't be worth $1,000 or whatever. Some of these people just will never get it. And that's fine because then we have a chance to make something, right? Because otherwise all of the money would go to Wall Street.
Well, I feel like you look at sort of Wall Street, for them, it doesn't help for you to understand how it works. They want to make it, you could say it's the same with the Fed. They want to make it as complex as possible so that you believe them and you believe what they say. And the more complex they make that, the more people just like, oh, I give up. Similar to finance, as you said, with DCF models. I've learned them as well in sort of in my experience. And yeah, they're pretty difficult to, especially if you're trying to create it from the start. And as you said, they don't have that much value. So it's trying to convince people to spend money with them because they have this expertise.
Mm-hmm. Yeah, I don't want to go into the weeds, and I haven't done a DCF, but the people who showed me a DCF and how it works, they have so many estimates in the DCF itself that it's completely useless, and none of them will admit it, but they all use it to base their future stock predictions, like interest rates and all these things out looking forward 10 years. It's impossible to get these numbers down. So I feel once you have a high quality company, you've done your homework, you've looked at they're actually growing in revenue, not shrinking. Okay, this is very important too. They're growing their revenue. They're not profitable yet, but you can see a trajectory that at some point they will be. And they're expanding with, what is the term from Warren? Urgent innovation?
Innovating with extreme urgency.
And they're innovating with extreme urgency. Then I think you found a possible winner. That's my point. That if you get like 5 of those, not one, it's really. I know there's people who bet on one thing, but I like to bet on like 5 different things. Bitcoin, Ethereum. I'll even say that Bitcoin, Ethereum, Tesla, Enphase, and maybe I have a little bit of PayPal, Square. But really, those, let's say 4 things that I'm heavily invested in. That if you find those 4 or 5 things, that's really where you should spread your money out. And that way, if one of those things goes away, you're not totally screwed, right? You can still have your 10, 20 X's.
But you also still can take profit from one of them and still have the other ones running. So it becomes, you can
I think traditionally that's very concentrated. Yeah, I know some people who put like 1 or 2% of their portfolio in like each stock. So
no. We go heavy, baby.
Listen, you're never going to make money that way. Yeah. You're never going to make money. I bought my house.
You're never going to be rich.
The equivalent. No, I bought my house with the equivalent of probably a $4,000 investment. I just waited 10 years, right? And so when you start looking at those sorts of returns and start looking at, that's thousands and thousands of percent returns. You're not going to make money getting 5-10% here, putting 5% stop losses on all of your positions. You're just not. What you're trying to do is protect your money. And that's fine if you make a lot of money, right? If you make a lot of money and you don't necessarily need the gains, you just need a safe place to grow it and hedge against inflation. That's great. There's plenty of channels like that. The value investor, right? Your everything money guys, like they just want to protect your money. But if you really want those home runs, you need 1,000% gains.
Yeah, I agree. If you're wealthy, as you said, that's, you just want to sort of maintain it and maybe make that 5, 6, 7 or 10% every year.
Because 5-10% is a lot of money of that. If you have a lot of money, 5-10% could be enough for you, right? Yeah. Because at the end of the day, what's funny is like the money that when we spend the money, it's like the dollar is still worth like whatever it's worth, right? Like a gallon of milk still costs the same for us as it does a billionaire. So
yeah, the objective, at least for me, if we were to talk about the long-term strategy, eventually I do want to cash out my Tesla. Let's talk about that side of it. That I'm not the guy who's saying I'm going to hold Tesla till $10,000 a share. I might have some shares left. Don't get me wrong. I don't know. But honestly, I think over 2,000, and we've talked about this, Carlos, I start selling my shares because what's the point of all this money if I don't use it to go enjoy my life? Like, I have kids too. Obviously, I want to leave something behind for them, but they're going to have real estate. They already have investment portfolios too that I'm building for them. So I think they'll be okay without me selling a bit of Tesla and enjoying, like, going on a vacation. You know what I mean? Yeah, that's really important, that at some point you have to actually start selling your assets or trimming them down. And we can talk about prices, but that's a whole part of investing, that, just like Carlos said earlier, that you have to know when you're going to sell. What is your price that you will sell your investment at? And I think we both have, at least for Tesla, probably around 2,000 we start trimming, right?
Well, I think because at that point, the market cap hitting 2T, there's going to be a lot of sell pressure, and so it's gonna retrace. It's not
Even
to say
if it goes up. I'm saying
let
let it continue going up. Are you gonna start chasing it back after you sell?
No, see, I think actually the point of what I'm trying to do now with these big investments in these few assets is to amplify my money to a point where I can adopt a different strategy. See, like, I'd love to play options on Tesla, but I don't have the balls to do that right now. But I think if crypto does what I need it to do and Tesla does what I need it to do, the capital will be there that I could buy some call options and kind of do an Emmett Peppers on this thing and start really making money, where even if I lose the money, it won't affect me because I have so much. But I think I'm not ready to be at that level yet. And so I'm trying to graduate to the next level and using this to get there. So yes, I'll be selling out of Tesla $1,500, $1,800, $2,000. But the eventual point is to get it back in there. Maybe I won't hold the shares. Maybe I'll have some left, but I can see myself doing more options on something like a Tesla at that point.
Yeah, I just want to point out that the Peter Lynch thing we just saw, he had Toys R Us and made his 30X. And then if he held it for 10 more years, it's bankrupt. So I'm not saying Tesla's going bankrupt, but I just mean at some point, take the fucking money, all right? And yeah, you can bleep out the curse, of course, but you got to take the money. You got to go do other things with it. Buy some real estate, buy some dividend stocks, make your life better, be safer at some point. Because, look, I know some people want to be billionaires. I'm okay being a millionaire. Let me put it this way.
Yeah, being a millionaire is not so bad. That's not a bad consolation prize.
What did he say? I didn't hear.
I was going to say it's hard to do that through investing unless you're managing other people's money. Then you can just, then you can manage 50 billion and take 1% of that, and then you can grow it from there. But actually trying to build to the point where you're a billionaire from returns is crazy.
It's possible. Look, if you invested in Bitcoin early and you put 100 grand into Bitcoin, it's $1 billion. I mean,
I did the math. When Bitcoin, when Bitcoin ICO'd, and then that initial tank, it was $3. And I did a calculation. I think it was $1,000. I think it was 1,000. If you bought $1,000 in Bitcoin, okay, like in 2012, it'd be worth like 1.2 billion today.
Well, this is what I mean, right?
It's 10. That's 10
I guess the issue is then who would hold it? You'd sell that.
Somebody
at
did.
$10.
Somebody did
Some
hold
people
it.
did.
Somebody did.
Yeah.
But look, the other thing is back then, Vitaly and I didn't really understand market cycles. This is, again, because crypto is a currency. It's not a stock. Like, it doesn't have quarterly earnings or a CEO or any of that. And so it does operate with some sort of cyclical market forces. If you understood that, no, you wouldn't sell it out. You'd understand that these things will have peaks and valleys, and the valley is a chance to buy more, and there'll always be another bigger peak until the market cap gets so high that it becomes like gold and it's essentially a stable coin.
Yeah, and I think a lot of people bought into it because of the tech side and I guess the philosophical side of it, like, trying to get decentralized,
stick it to the man,
get away from the government. Yeah, stick it to the man.
Yeah. But the point is, I probably wouldn't have been the guy holding it. As soon as I got my 5 million, I would have been out. Like, I have numbers that if I hit, I'm sort of say goodbye. That position would leave. But $5 million, yes, I would hate myself that it's not $1 billion, but your world is different, right? Money basically doesn't mean anything at 5 million. You can afford a house, a really nice house, probably Brooklyn would buy $1 million. Well, I'm saying if you wanted a really, really nice, expensive house, $1 million, $2 million, you still have 3 million left to do whatever you want. And you can invest that in dividends and then earn 150,000, even if it's 5% for the rest of your life.
Well, there's a classic. They say if it's growing, you take out 4% of your portfolio, and if it's growing 6, 7, 8% on average, then you're still going to grow the actual portfolio. So I know that's what a lot of like the FIRE people do.
Exactly.
Yeah.
That's what I'm heading towards. Basically, FIRE, where I don't need to actually do anything else. Even YouTube, I want it to be a choice. I don't want it to be a job. That's why we're doing this. It's that kind of thing.
do what you enjoy. And I think that's the main thing for a lot of people. It's like building that financial freedom to then do what you want to do,
Absolutely.
be it doing YouTube, be it other stuff.
I do want to show something just based off of what Vitaly just said. He said like, okay, he wouldn't be a billionaire, but like 5 million is enough, right? I think having a number. Say again.
Maybe not in LA or New York.
Right.
No, I lived in New York my whole life. I never made 5 million a year.
Yeah.
Like there wasn't a year that I made 5 million. I was like, okay.
Right. but in addition to having a sort of a cash out point for each stock, I mean, I think everyone in their head should have a number. There's a number in your head where you say, if I hit this number, I'm done. I'm done. I can handle everything I want to handle. I can live out the rest of my life, and I can set up my future generations. I can take care of the people that that helped me along the way. And it reminded me of, I don't know if you ever watched that show Breaking Bad.
Yeah.
Do you watch the show? So remember first season, he gets diagnosed with cancer, and this guy was like super smart. So he came up with a number, and he said to himself, I'm going to do the calculation of all the money that my family's going to need for the rest of their life so that they're set up, so the house is paid, blah, blah, blah. And he came up with a number, and it was like $772,000.14. And he's like, I'm only going to sell these drugs until I hit 700, right? And so there was this great scene. I don't know if you remember this scene when he actually had the money.
Yeah.
It was in the storage space. It was like at the end of season 2 or whatever. It was a great scene with him and his wife when he actually got the money together. And so this scene,
that guy doesn't look like his wife, by the way.
Well, that was the guy that helped him carry the money in there. There's a whole scene with his wife in there where he says to her, she's like, what are you doing all this for? And he like pulls off the thing and he's like, there it is. There's the $700,000 that we say we need. And so that image always stayed with me where I say, I have my own number as to what it is that I need. After that, I know that I won, And it's funny because I talk to some of my friends and their numbers like a lot higher than mine. I'm like, damn, what are you spending your money on? But to me, that's the end game. And so each of these positions is a way of getting a chunk of that, because I don't think I'm going to get it all in one shot, And so I think that's super important, is to have that goal, because if you operate without goals, it's really easy to chase the shiny new toy, right? So there's reasons why, like if a new SPAC comes out, I tell myself, is that going to help me get towards my goal? Yeah, I'd love to invest in the company. Maybe there is a 5 or 10x in it, but is that really helping me go towards my goal, or is it a distraction? And it may be boring. Sometimes it's boring to just be, so heavy in Tesla. But at the end of the day, what are you doing this for? Are you doing this for the excitement of it, or are you doing it for the gains? And I say to myself, if I hit my number, I'll play. I'll play in some SPACs. I'll play in some shit coins or whatever. But the goal is to hit the number.
So you're going to do a Walter White and keep going. Can't get out.
Yeah. I'm just going to keep doing this.
Oh, of course. 20 years from now, we'll be revisiting this conversation.
20 years from now, yeah. But
Exactly.
if I'm not on an island by then, I did something wrong.
Yeah.
Welcome to Freelancer Finance. We are.
Who is this guy?
Have that private
Anthony,
jets
you
coming
still
in.
making videos?
We've got corsets, 10 pillars.
We've been in the metaverse for 12 years.
Yeah, exactly. You won't even have to be on an island.
Yeah, it is the
Killing some
metaverse,
shitcoin.
right?
By then.
Exactly.
But this was fun. This was fun. I didn't realize how fun it is to be interviewed, because we're always on the other side. It's pretty fun.
Yeah, thanks,
Yeah.
guys. Well, I thought it was almost like you interviewing me at the same time. It was back and forth. I really enjoyed it.
This was
I'll
fun.
put both of obviously all your information down in the description. So if anyone wants to, see these guys, they've got some great content, sort of similar length. I think most of your videos are sort of an hour or half an hour to an hour. So, but they're really valuable, I think, all the information, and you cover a crazy range of topics. That's what I found interesting. Most people are very like specific on like a single company, but you guys cover everything.
Yeah, that's boring, isn't it? Just to say like covering one thing every day over and over. Like I love Tesla, but damn, I don't want to speak about it 24/7.
Talk about Tesla every day.
Yeah, exactly.
Yeah, well, we do talk
You know
about
what, it's
Tesla every
like-
day. To be fair, but
It's like you said, or not even like you said. Was it Lynch was saying that like people that invest don't talk about sports, right? So this is like I don't really
this
get
is
into
our
sports.
sport.
Yeah, I follow UFC, and that's probably like my biggest sport. But this to me is like, it is like a sport. There's so much happening, and just even investing and learning about these companies has shown me a lot, just about how markets move, a lot about politics, a lot about cultures, different cultures around the world. It's super interesting, and it's definitely made me a more well-rounded human being.
Yeah, I think that's vital. It's just opening your mind up to different things. It's so easy to get so ingrained in maybe your specific thoughts or specific ideology or anything like that. Or if you open your mind up to, I guess, reality or just the markets or anything in general. Yeah, I think.
Well, you open up my mind. I'm going to look at Shell stock tomorrow.
Oh yeah, I don't know.
See what they're doing. See what their 52-week low is.
Yeah, maybe. I guess the risk there is it's just energy. So if oil goes down, then they're probably going to get tank as well.
If they give me a good dividend.
Yeah, true. And I guess their competitor like BP, the big one, they had lots of Russia exposure, so they got trampled compared to Shell. So, all that stuff. But yeah, thanks guys. Really appreciate the time.
Oh, no problem. Thanks for having us.
Thank you so much for listening, and if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.